Hi everybody, welcome to the next in our series of vlogs, helping you understand the situation with COVID. My name is Mark Dunsmuir, I'm Principal here at Pursuit Advisors, and joining me today is Kathryn Bordonaro. Kathryn is the Managing Director of Allbiz Finance. Allbiz Finance are a specialised commercial broking organisation who operate here in Warragul. So thanks for joining us, Kathryn.
Thank you. It's great to join you and discuss some complex issues in complex times.
So what we're going to do today is go through some questions with Kathryn that we've been often asked by our clients. But before we do that, Kathryn, I just want to ask, how are you guys going in the current situation? What are you guys seeing?
Well, we're self-employed people ourselves, so we feel that we can understand and share the journey that our clients are on. We've got all the same thoughts and questions going through our mind. How long is this going to go for? We want to look after our staff. We want to look after our clients to the best of our ability. So one of the things that we are doing is making sure that we really look after ourselves well. And I would like to make sure that everybody out there puts their physical and their mental health first, because we're talking about money, we're talking about stressful times. So it'd be really great. I'd like to direct people to use a resource called My Business Health, which is a website put together by the Australian Small Business Commissioner. And it's a really great resource. I'm using it. You can check in there. You can answer a few questions each day, and it's a really good way to see how you're going so that you can then lead your business and lead your team and work towards getting through this.
Thanks, Kathryn. Thanks for that. So if you're okay, what we'll do is we'll start with the questions, and I'll start with the major one that's on everybody's minds at the moment. How's the lending environment been impacted by the COVID-19 pandemic?
The analogy that I'm using, and I might give away my age here, is there was a good movie in the 80s, and it was called That Was Then and This Is Now. And that's a phrase that we're using a lot when we're trying to explain the lending environment to our customers. The lending policies that our panel of lenders had in December, they no longer exist. A big window's been open and all those lending policies have been thrown out the window, and we have new lending policies to work with. And those lending policies, just like so much else that we're all dealing with, are moving targets. We get weekly and sometimes daily updates with what's changing. We've had some lenders exit the market already. We saw that happen back in 2008 in the GFC, where lenders exited the market. They exited operating in Australia. We've had that already start to happen. So your choice of lenders is already restricted. But the key thing is that streamlined lending policies, so businesses that have operated for some time and have had good credit histories, have come to expect that they don't need to supply large amounts of information to continue to access credit. That's changed. You need to provide a lot more information. We have some people that are sort of spending their time resisting those requests for further information. If you want to access credit in this environment, you will need to provide a full and complete application. So getting yourself organised before you apply for credit is a really good step to take. Think about if somebody was coming to you and asking you to lend them some money, what's the sort of information that you would like to know before you would lend someone money? We're very, very happy to guide people in that information. And that's one of the reasons why we have good success rates in helping our customers, is we don't give banks incomplete lending applications. Put the information together, get your books up to date, get your BAS up to date, get your debtors and creditors up to date. The work that you put in being up to date will improve your access to finance.
Good advice. Thank you very much, Kathryn. Now, another question I've got for you. Now, the federal government's announced they'd guarantee 50% of any new SME loans up to $250,000 for a period of 3 years. But how can a business actually apply for those loans?
Mm-hmm. So the SME scheme, there's a $40 billion fund that the federal government have put together. And there's, I think the last list that I saw, there's 42 lenders that have been approved to participate in that scheme. It's eligible to businesses that have an annual turnover of up to $50 million. And the loan size, as you said, is up to $250,000. The loan term can be up to 3 years, and a really good practical feature of that product is that it comes with an initial 6-month payment deferral. So if you see, it makes sense, doesn't it? If you're seeking funds to help you with your cash flow, you don't want to start with a big payment next month while we're still in the eye of the storm.
Yeah.
So that's a really good, productive facility of the product. The government is guaranteeing 50% of each loan facility. So it's providing lenders with some comfort and security there. And it also means that the applicant doesn't have to provide additional bricks and mortar type security or other assets to secure the rest of the loan. But it's really important to remember that normal credit guidelines do still apply. There's not just large bags filled with money sitting there waiting for the banks to hand out. Normal credit criteria does apply. And the purpose of these loans is to help businesses with COVID cash flow problems. It's not for funding for purposes that existed before we went into this environment. So to access those loans, you can go to the treasury.gov.au website and you can access the list of the 42 lenders that are on there. We are also offering to assist people with accessing those products. And I'm very happy to do a phone call with anybody that's thinking about accessing one of those products. I'll give you half an hour of my mind with some hints and tips, or if you do decide that you would like some more professional assistance with preparing your application, we can work on that as well. It's important to also remember that it is another debt. So do you need the assistance? I'm never going to encourage someone to borrow more than they need to.
Yep.
And you don't have to borrow the full 250. And you can also draw a facility down progressively. Yep. So if you need $100,000 now, you don't need to draw down $250,000 now, because that will help save you with interest. So again, thinking about what do you need it for? What is the specific purpose? And on the back of those products, some lenders out there have also developed a add-on product, which is a JobKeeper specific overdraft. So if you've registered for JobKeeper, you have a list of your employees, you're paying out X amount of dollars, but we have the cash flow lag where the money from the government doesn't come in for some time. There is a specific overdraft that can cover that timing gap for you. So that might be something else of interest if you have qualified for the JobKeeper program.
Yeah, and we've actually seen some clients use that overdraft already, which has been great. Now, Kathryn, probably when the Banking Royal Commission happened, one thing we did see was the time it took to actually borrow, ask the bank for money and get the money was actually a lot longer than it used to be. So given the current situation, if someone is buying a house or buying a business, how long should they allow finance clauses, or how long should they put a finance clause in for?
First of all, always, doesn't matter how confident you are about accessing finance, always sign a contract subject to finance. It removes stress for yourself and for everybody in the chain. That's the first thing that I ask of all of my clients. I think that a 30-day time frame is not achievable in this climate. You would want at least 60 days. And if you can, I would be asking for 90 days. The time frame for assessment has blown out because banks are directing resources to helping people with setting up payment deferrals and spending a lot more time with each customer to make sure that appropriate products are being delivered. So, and banks have also had their work forces disrupted just as we all have. So people are working from home. Some of their offshore processing centres have been disrupted or shut down completely. So timeframes have blown out significantly. And if you do want to avoid that 90-day time frame and tighten it up to a 60-day, again, get organised today. Start prepare. If you're even thinking about that you are going to be accessing finance for a property purchase or an equipment purchase, get organised today. Start getting that information together, because if you go to a lender and ask for credit and then they give you a great big long list of information and it takes you 30 days to get that information together, you've just lost 30 days. So get organised today. And that might mean that you do get your finance a lot faster, and that might help you in your negotiating the terms of a purchase.
Yeah, good advice. Thanks, Kathryn. Now, one thing we saw when this all started going down, a lot of people were calling their banks asking for repayment holidays and pausing their loans. In our opinion, maybe not realising what they're actually getting themselves into and the consequences of doing that. Can you just outline what the consequences are of actually pausing or taking a repayment holiday on your loan?
Yeah, we certainly experienced that. I would like to applaud the Australian Bankers Association for the work that was done on this. The word unprecedented is being thrown around a lot, and this is something that's unprecedented. But I think it is a useful step to take if you need to. And it's very important to understand that if you do avail of a payment holiday, that will not be recorded on your credit file and it will not impact your credit rating. So that's really, really important. Another thing to understand is that there are some lenders out there that we refer to in the industry as tier 2 lenders. And they have wholesale funding arrangements sitting behind them. They're not members of the Australian Banking Association, and they don't have the full ability to offer those payment holidays. So if you have lending from those type of lenders, which is a large percentage of the market in Australia, you might need a little bit more assistance in making those payment arrangements. But before we've assisted clients with making the arrangements, and we've actually had some clients come back to us afterwards after that initial panic and ask to have their payments turned back on. And one major lender also took a slightly different approach, where they've taken an opt-out approach. So they've deferred everybody's payments. If you would like your payments to continue, you need to contact the lender and ask, no, I would still like to keep my payments as normal. So that's just something to be aware of in the huge volumes of emails and letters that are probably passing across everybody's desks at the moment. But big red flag, if you do take advantage of the payment deferrals, it could affect your ability to access credit in the short to medium future. So I've got lending policies here that the very first question that's being asked in a finance application is, has the customer deferred any payments? As soon as you answer yes to that question, the lending process either grinds to a halt or becomes a lot more difficult. There's a lot more oversight on the customer, and there's a lot more information required. So if you're a business that you don't need those payment deferrals, and you're thinking that you do need to purchase another motor vehicle before the end of the year, maybe you need, a lot of businesses are going to contactless delivery, and so they need a delivery van, and you want to finance that in the next few months. If you've got your payments on deferral, it will complicate your access to credit. So you need to think carefully. I would encourage business owners to talk with their trusted advisors, talk with an accountant, talk with a good commercial finance broker before making those decisions. And if you have put some payments on deferral and you think, oh, I am going to need some finance, you can turn them back on before you make a finance application. So again, being organised, ask some questions, get some guidance, and get that information before you make decisions.
Yep, thanks, Kathy. And another thing that we're also seeing as well is when you do take a repayment holiday, the interest doesn't necessarily take a holiday either.
No, the interest is still accruing there, and the term of your loan will be extended. So you will end up with a higher debt, but that's not necessarily, that's not a bad thing. It's about tailoring what you need to do in your business to get through until, I'm not going to say until we're back to normal, until we find our new normal. So it's not a bad thing. There is no shame in accessing those payment holidays, but you do need to know there's more interest, your loan term will be longer, and you might restrict your access to credit in the short to medium term.
Yeah, thank you very much, Kathy. And my final question today, with these historic low interest rates, there might be a lot of people thinking about fixing those interest rates now.
Yes.
Have you got any commentary around what people should be thinking about when they think about fixing their interest rates?
That is really an issue that does need a very tailored and specific to your situation answer. I've over the years, I remember when I bought my first investment property, and I was terrified. It was a big step for me, and I fixed half of my debt because I had a goal of, I wanted to have some surety about knowing and being able to put into my budget what my repayments were. And fixing the debt gave me that surety. But with fixing an interest rate, you can also take away some of your flexibility with a debt. If you do want to be able to make slightly higher payments, if you do, in a few months' time, you do find that you have got more funds than what you had predicted and you'd like to make a lump sum reduction, that might be restricted because you've fixed your interest rate. So again, asking questions, apart from just being attracted by a lovely low headline rate, what's the fine print? What are the entanglements of fixing the rate? And what are my goals that I'm seeking to achieve? And if you really do all your research and you're really conflicted, a really good way to hedge your bets is to fix half the debt and leave half on variable. And then you can focus on that variable debt. And you know that you fixed one, you can enter that as a fixed repayment in your budget, and you don't have to look at that too hard for the next couple of years. So ask questions, really look at the fine print that comes with a fixed interest rate.
Yep. Well, thank you very much, Kathryn, and thanks so much for answering those questions. For me, there was a few key takeaways in this that I'm sure others will have. The first one, and this one has never really changed, is be organised before you actually go to apply. It's so important. The other one was really the waiting period, or the finance clause, 60 to 90 days. So a lot of people I would see normally go with the 2-week finance clause, that's standard, without even thinking about this. So that's really important. And obviously a longer finance clause gives your accountant if I can put some personal interest out there, a little bit of a chop out. And the other final one was that repayment holidays. You know, really think about that before you actually take up the option of taking up a payment holiday. So, Kathryn, thank you so much for your time today. Guys, I'm just putting up a disclaimer here just so everybody understands this conversation is a general conversation, not specific to your needs. If you are going to take action, you really need to speak to Pursuit or Allbiz first. Now, if you have any questions on this presentation, you can contact myself and my contact details are there. And Kathryn, as mentioned, is more than happy to help out clients. Kathryn and her team, if I can say, are more than happy to help out clients. You'll see Kathryn's phone number there is 03 5616 2500. Now, remember, if you are struggling with the impacts of the coronavirus, need someone to talk to, please seek professional support, as Kathryn has also talked about. Beyond Blue services are listed on the screen. So thanks for joining us today.
Thank you.